Good evening, everyone. So I'm TJ, the GBO ambassador for the Philippines, and joined with us today is Mr. Oliver, David, and Pao, and many more are coming soon. Mr. Oliver is a licensed real estate agent here in the Philippines. He is affiliated with REMAX, and he is quite skillful. Combination of academic experience and also technical and business experience. And today, he's bringing in his real estate license into play, and he would like to talk about the difference between bank financing and private financing in real estate, specifically in the Philippines. Please help me welcome Mr. Oliver Liwanag.
Okay, so good evening, guys. So I'll be starting my presentation. So this is the topic for tonight: bank financing and private financing in real estate. Which is better? So this is me. So we first begin with an agenda, and these are the things that we're going to talk about. I'll be coming up first with an introduction, and then I'll be giving a brief definition of bank financing and private financing, give you the similarities and the differences, and then we'll be asking the question, which is better? And to facilitate that question, I'll be giving simulated computations just to see which is better depending on the situation, and then if we have enough time, then we'll have a discussion forum. So let's begin with the introduction. Okay, so let's say you're a prospective buyer and you see this house. So this is an actual house in Quezon City. And this is around like 40 million pesos or 800,000 US dollars. So this is a very beautiful house, and let's say you're this person and you really want to buy this house. However, you don't have enough funds. So what you only have is, let's say, for example, 20% of the value of the 40 million. So that's around 8 million pesos or 160,000 US dollars. So what do? So the next best thing that you can do is to borrow money. So once you have the money, then you can use that money to purchase the house. Now there are two ways. Where will you borrow it from? So you can either source it from bank financing or private financing. So which is which? Which is better? Let's first go to the definition of bank financing and private financing. So with bank financing, also known as bank lending, it is a method of fund sourcing from a banking institution in the form of loans. So in other words, this is where you borrow money so you can purchase a property. So here in the Philippines, so we have like prospective buyers who don't have that much cash. They only have, like, say, 20% of the value. Then 80% of that, they resort to bank financing. So what then is private financing? This is another alternative way to borrow money, also known as private lending, and it's a method of fund sourcing from a private institution in the form of loans. Just the same, this is also where you borrow money so you can purchase a property. So what are the similarities of bank financing and private financing? So both are a source of loans, both charge an interest rates, and both go through a loan application process. So those are the similarities. Now that we have discussed what the similarities are, now let's go to the differences. So what are the differences? So I've selected like three things that I've noticed for bank financing and private financing. So for in terms of interest rates, bank financing offers low interest rates while private financing offer high interest rates. So I'll be giving examples, especially here in the Philippines. And in terms of speed, it takes some time for bank financing to get your loan approved, while for private financing, it's relatively faster. Now, as for the approval process, there's more scrutiny done by a bank, and for private financing, it's relatively easier. So let's get into the details of these differences. Now, in terms of bank financing interest rates, especially here in the Philippines, here's an example. Let's say you are going to go for a bank, and they have the standard interest rates for 5 years. And we've got these three banks in the Philippines. You got the Bank of the Philippine Islands, or BPI, Banco de Oro, and Security Bank. So as you can see here, you've got the corresponding interest rates for Bank of the Philippine Islands. That's 7.25% per annum. For Banco de Oro, that's 6.28. And for Security Bank, that's 6.75. So what would be the interest rates for private financing? Okay, so let's say in my case, I'm attached also to a private financing company, and they tap brokers just like me to help market their services. So when I checked out their rates, this is what I found. Oops. Wait, let me. Okay, but before that, let's check this out. Now, why are their interest rates low for bank financing? The reason why they're low is because they have multiple sources of income. So they get their income not only from loans, but they get it from the depositors' money, and they do foreign exchange. They trade in the foreign exchange market. So with a lot of money that they have, they can cover their costs. Risks are low, which is the reason why they can bring down their interest rates. Okay, now for private financing, as you can see, here's a private financing company called Transfield Credit Corp, and they have an interest rate of 24% per annum. Very, very high compared to banks. Now, why are their interest rates high? Their interest rates high. More often than not, their only source of income is just offering loans. So that's one reason why they charge high. Now, speed of approval. So here in the Philippines, it can take an average from 5 to 17 days on the average. Now, worst case scenario, it can go as long as 45 days. So you give your application and requirements to the bank, and then wait. 5 days is already, this is pretty fast. But if it's going to take you 45 days, it is like 45 working days. Now, if you can wait, well and good. But if you're in a hurry, then you might want to consider private financing, because in private financing, speed of approval can be from 1 to 5 days. Okay, so why is it so long? Why is it so fast? Why is it so slow? Okay, part of which is because of the process of evaluating the loan. Now, here is an example. Well, this is an oversimplified example of how banks do it. So let's say here you got 4 steps. So a person applies for a loan and says, okay, Mr. Bank, I'd like to apply for a housing loan Oh yeah, okay. What's the property all about? It's a 40 million peso property in Quezon City. Okay. So the next step is we need to go to the property and get it appraised. So they go there, check it out. So how much is this? 40 million. Okay. But more often than not, when they appraise it lower than the selling price. Step three, then this is where the buyers now submit their loan requirements. And then step four, after like 17 to 45 days, then it gets approved. So this is a simplified way of the loan application process for bank financing. Now for private financing, it's a little bit shorter. As you can see here, you only have 3 steps. You apply for the loan, and then as you can see, there is no bank appraisal process. You just submit the loan requirements and you get your loan approved in 1 to 5 days. So that's pretty fast. Okay, so question now. So given those similarities and differences, which is better? So here, it depends on your situation. So let's go back to this house and lot at 40 million or 800,000 US dollars. Now, if your purpose is to buy the property for residential purposes, then bank financing may be the best choice. Now, just in case you get declined for whatever reason and you need the money, then private financing may be the next choice for you. Okay, so let me now shift to. Okay, but before that, I'll now get to the next slide. Okay, let's say you have another situation here wherein, let's say, instead of buying a property for residential purposes, you are buying a property for investment purposes. And let's say in this case, speed of revenue turnover is something that you're considering. You see that this one is already an earning dormitel, and you'd like to be an owner of this dormitel. So by the time you already have ownership of this, you already inherit the existing revenues of this building. So if you're gonna go, let's say, for bank financing, that might take too long, and you, as an investor, you might want to say, you know what, I'd really like to get the loan fast. I have some money. I just like to compensate it with financing scheme, and then and then with the earnings here, I can pay back the investment or the private financier. So, oops. Okay, so the next thing I'm going to do is give you a simulation of the bank financing and private financing schemes. So let me now go to amortization projections. All right. Okay, so here's the difference between bank financing and private financing. So let's go back to that house that I showed you a while ago, priced at 40 million. All right. And as you can see here, you will see here the, oops, bank appraised price. Let's assume that the bank checks it out, says, okay, I know it's 40 million, but I'm going to appraise it the value of 39 million. So what does it say? Okay, Mr. Buyer, I am going to cover 80% of the bank appraised price, not the unit price. So that means to say I'm going to loan you 31.2 million, while the 20% here is the amount that you're going to shoulder yourself. This is the amount that you're going to pay the seller. While this one, I'm going to finance 31.2. Now take a look at this, 800,000. This is the additional balance to pay the seller. Now, since this is the amount not covered in the bank loan, then the buyer needs to shell out another 800,000 on top of the 8 million that he has. Okay, so there are cases like that, well, more often than not. And let's go here, the Bpi interest rate. So I think we came up with a value of 7.25%. And there you go. So it's now computed to for the buyer to pay 366,291.25 pesos for monthly amortizations for the next 3 years. So that's around $7,300. Now, if we go for private financing, how would that look like? Let's see, 40 million. Okay, in this case, there is no appraisal. As you see, there is no appraisal for that. And let's say the bank, the private financing institution says, okay, we will tag the 80% at 40 million, and we give you a straight 32M. Unlike for the bank, they will only give 31.2, but for a private institution like this one, they're going to give 32. So there's no additional balance to pay, unlike with the bank. Here, since not everything is covered, the buyer needs to shell out another 800K. Here, there's nothing. But here's the kicker. Now let's go for the interest rate per annum. That's 24%. And there you go. That's 705. Hence the shocking emoticon. 705,000 monthly amortization for the next 10 years. So if you take a look in the first sheet, that's 366,000. Here, it's almost double the price, 705. So now, in this case, it suggests that this would be a better option. Now, let's say this buyer makes computations using the bank financing option. Okay, so let's check this out. So property purchase at 40 million, and then let's say this guy earns like around 500,000 and has an operating cost just to manage the house at 100K, and take into account 366,000 monthly amortization. If this guy says, okay, I still have 33,000 to spare. So with a bank financing scheme, this would be a better option for this situation. Now, let's say for the Dormitel option, let's go back to the Dormitel. Okay, how much is that? 42.5. Okay, so let's change this back, 42.5 million. No appraisal. Okay, let's say this one this time is not an ordinary buyer, but a real estate investor. Okay, it gets a loan worth 34 million, gets 8.5 million coming from his own pocket, and needs to pay 749,000 for the Dormitel. So how will that look like? Okay, so you've got this Dormitel, and then let's say this existing Dormitel having existing data, and it says that in this existing Dormitel he earns 1.9 million. Wow. and let's say we consider that it has an operating cost of 30%, and inputting the amortization of 749,000 coming from private financing, and this guy gets this real estate investor gets a monthly income of 597,000. And let's say he finds out that, okay, I can escalate my monthly earnings by my I can escalate yearly by 10%. So how's that going to look like? Okay, there you go. So in 1 year, this investor can earn 23 million with an annual net income after tax of 5 million. And if he earns for the next 5 years, take a look, his net income would be like 12 million. So, given this, how long before he can get back his investment of 42.5? So in this case, he gets it back in almost 5 years. Now, since this is like a 10-year loan, on the 5th year, he already buys it back, gets it back. What will happen in the next 5 years? So let's predict. So on the 10th year, he already has like 26 million. So just imagine what would be the return on investment. 344%. So in the scheme of things, now this one would, although it's higher, but he gets the loan faster, then he can now purchase this property and start enjoying the benefits of this earning dormitel. So that's another way to simulate the computations, showing that private financing scheme may be the better option in this case. So those are the two situations, and that's the end of my presentation. Thank you for your time. This is Oliver Liwanag from Remax Capital, and I'm a real estate broker. Thank you very much. So if you have any questions, let me know.
Thank you so much, Mr.
Thank you.
Oliver. I guess we could now start sharing ourselves, or showing our video cameras again, and unmute ourselves for those who would like to have, or who would like to ask some questions.
Okay.
It looks like David has a question.
Well, I didn't feel that those were comparable things, because one is taking a loan to operate a business, and one could be a loan to buy a residence. So of course it's very different. And also, even the bank would still give you a better deal for the dormitel as a business. And you still have other to look at, because you'll have income tax to pay on that too, on the revenue and the local business permits. So it's not really, complete there, the presentation, because you're missing some numbers to see the the exact figures, how much is left afterwards.
Yeah. After David's question, Pao would like to speak as well. I saw a mark or a ping. So go ahead, Mr. Oliver, to address David's question.
Oh, okay. Well, admittedly, so it's this doesn't paint the whole picture. See, when I did this, it's at the back of my mind, it would always go back to bank financing. So that's where I'm coming from. It's just that this could be an option. This private financing in a situation like that. But then again, if you can get a better rate for bank financing, sure, why not? So yeah, so based on my experience, most people would rather go for bank financing. Yeah, but I think it's just for the speed of getting the funds from private financing. That's the advantage that I see. So yeah, so that's what I can say so far. Yeah, but of course, there's always room for improvement, and thank you for that.
I actually wanted to ask a question after Pao. So, Pao, you may ask your question. Mine is related to my new investment and venture, but Pao, go ahead. Please ask your question. Oh, wait, Pao, we can see your lips moving, but we can't hear you. Can you unmute yourself or set your microphone? Yeah. Okay, so he turned off his video. To do the setting of noisy, if you hover in the middle, there's like audio settings, and you could choose the microphone of your choice and speaker.
Can you hear me now?
Yes, we can. Yes.
Okay.
There you go.
Sorry, something's wrong with the camera. Anyway, no, I just want to apologize. I came in late. I had to attend to a personal matter.
No worries.
Sorry. I just caught the last part. How much was the interest based on? This is from private lending, right?
Yes, yes.
How much is the interest rate
24% per annum
per
or
annum?
2%. Yes, that's 2% per month.
Uh,
Yeah, so
okay.
that's coming from an actual private institution.
Mhm.
This company actually is a subsidiary of the developer. So
Yeah.
if let's say the buyer can't, for some reason, get the funds from a bank, then
Yes.
this developer would say, "Okay, I have a private financing firm. You might want to try it out."
Regarding the title, if ever, let's say, one pushes through with private financing, will the title be on escrow or something that would, what do you call this? Like, for example, for the banks, right? They would have to, I don't forgot the term, but it's encumbered, if I'm not mistaken, back to the bank's favor, right? And then once you pay
Yes.
off the bank, they will release the title with the notation that it has been I forgot the chattel mortgage or something. I might
Yeah.
be yeah. In the private in the private setup, what's the arrangement here? Do we is there a
Ah,
change of title required, or will there be some legal documents needed?
okay. From what I know, with the at least with the this private institution Transfil, when I attended their seminar, so what they
Mm-hmm.
do is they once it transfers to the name of the buyer, then they're the ones who hold it, just like a bank. Yeah, so just like a bank, see where the bank gets hold of the title of the buyer until the buyer pays. So just in the same way that this private institution, once he gets it under the name of the buyer, then he holds on to it. So same thing.
Yeah. Isn't it updated on the registry of deeds? Right.
A registry of deeds. Oh yeah, I think there's what you call annotation. They're gonna annotate it. Ah, okay, this thing is under mortgage right now. Yeah, and then up until it gets paid, then they update the second page that it's fully paid.
I'm very familiar because I have a lending company.
Okay, okay, right. Uh,
Yeah. Yeah. Pao, still
yeah.
there? Okay. Yeah, we can tell if you're done asking your question, Pao, because your camera's turned off. May I ask my question now? Hello? I think we lost him. Pao? Okay, I think we lost Pao. Okay, so my question to you, Mr. Oliver, while we're waiting for Pao to revive or
Yes.
get back. I ventured in a new business, convenience store, lately, and surprisingly, I'm still in the middle of the grand opening of my first branch, and now I have 3 pending requests for franchisees.
Oh.
So that being said, what do you think is a good strategy for my convenience store to grow as fast as I can and still be profitable for my shareholders? Should I apply at this stage? Should I apply for a bank loan or a private financing option? So I could put up as many branches as I can, owned by the corporation, aside from waiting for more franchisees to put up more branches. Because right now there's one branch owned by the corporation, and there are 3 pending franchisees who wants to put up in their own hometowns: Cagayan de Oro, Laguna, Pateros. So, what would you recommend
Okay.
or advise my new investment situation?
Okay. So, yeah, well, I get it. It depends on your speed. So if you're ramping up really fast, then you might want to go for private financing with high interest rate. But if you're taking it slow, let's say you got this, you just want to um, start first with that one branch. Make sure that it grows properly, and then you just want to, and you can afford to take your time. You might want to go for bank financing because it has lower interest rates. Yeah, so that's what I would do. But if you're ramping up, well, the next best thing though is, instead of loans, you might want to go for investors. There are a lot of ways to finance your business. One is through loans and one is through investments. So if you're gonna go via loans, and you want to make sure that you don't want to uh, release a lot of expenditures in interest rates, you might want to go for bank financing. And as long as you have your papers and then it all checks out, why not go for bank financing? So that's what I would do. Now, if I want to ramp up, let's say, my operations, first thing I would do is make sure that I think you're in a franchise, right? So you might want to perfect the system of your franchise, and then ramp it up through investments. Get an investor. I think that's a faster way. But if it's like through loans, I suggest you go for bank loans,
Got it. Got
bank
it.
financing rather.
I actually have a follow-up question, unless other participants would like to ask one more question to Mr. Oliver. David, you have something in mind? You're muted, David.
All right. Yeah, thank you. Loans are a problem for new companies. Usually a bank won't lend you something if you're a brand new company, and they're still going to ask for collateral, which is usually real estate. So you're kind of stuck with the high interest rates, unless you can find some company that can give you something lower. Or the other way is with the franchise business, because by giving franchises, you're charging a franchise fee, which gives you some cash flow to open your own branches too.
That's correct.
The only thing is, you're going to have to spend some money to get all these processes and manuals done. You're going to have to join a franchise association. There's a list you can find someplace on DTI, and if you can't find it, I can send it to you, about the rules for a franchise,
Thanks, David. That's
the
amazing.
requirements. Okay, so it's not a big list of things, but there are requirements to legally sell franchises.
Got it. Yeah. Because actually, my follow-up question to Mr. Oliver is, let's put it in the shoes of the franchisee or potential or a lead for who's gonna franchise, or a lead franchisee. Do you think they would like to purchase their own land and set up, let's say, the convenience store there, wouldn't it be better if they loan it from a bank or a financial institution so they could acquire the property and at the same time set up the business? Or is that something that's too
Uh,
risky for them as a franchisee?
okay, just picking off what like where David's coming from. So if you're like a new
Franchisee?
new business,
Yeah.
yeah. So I think they'll think like three times. So what's company XYZ? Who's this guy?
Right.
Yeah. So maybe in this case, private financing institution might give you the loan. Oh, it's your XYZ. Yeah, sure, but you got like those higher interest rates.
Mm.
So that might be the way to go in purchasing the land.
Yeah, because
Or you might want to get other partners to chip
yeah.
in.
Yeah, take note, the convenience store is a separate company from the franchisee. So we're talking about the point of view of the franchisee. If they're eligible or they should take a bank loan. So,
Oh, bank loan.
yeah, or
Well, the
Oh,
other
or any
thing, the
loan.
other thing that a bank looks at is your capacity to pay.
That's correct.
So
Yes.
until the franchisee makes some money, it takes time. In the beginning, he's just sinking some money in. So he has to have some other income to be able to pay off the beginning of the loan.
Yeah, I presume maybe they have the chance to do a personal loan, right? In terms of
That's the same thing.
yeah.
It doesn't matter. They still want to see, because if it's going to be a high amount of money, how will you pay it back? If it's a small loan, yeah, it's a salary loan, and every month they can, pay part from their salary. Or you have to look at your business differently and become like the way they do it in the US. McDonald's, yes, they sell food, but they're also a real estate company because they own most of the land where they are. So buy small pieces of land, and especially in the provinces, probably it's not as expensive. And you can be the one taking the mortgage, but you have a business model because you're going to rent it out to somebody. You just have to. The problem in the Philippines real estate market that I find, compared, for example, to the US, it's very easy to buy a property in the US that the rental income will cover the mortgage and very often still have something left over. And it's very rare in the Philippines.
Wow. Okay. So that's a challenge here. I see. I see.
yeah.
Any other question, guys? Because it's been an hour and 5 minutes, and I'm sure it says on the event we're only here for an hour. So, just in case you guys needed to be somewhere. So, any additional questions? What about you, pal? Do you have questions, David?
Well, no, that's about it. I just know that I mean, you can get bank loans, but it's not easy to, the interest rates in the Philippines and real estate in general in the Philippines is, very expensive compared to what people earn and the returns now. Like in my office building, I was told there's a small unit that came up for sale now. But when I look at how much it can be rented out for, it's like if there's no increase in the rent, it'll take like 14 years for me to get the money back. And that's if I don't count taxes.
Wow. Okay.
And that's, but I had bought a unit a few years ago already in that building, in a better area of the building. Let's see, and a bit bigger, around 8 square meters bigger. Because the one I bought is 36 meters. The one for sale is 28 square meters, and I paid 1.9 million. Now this one they're asking for 3 million, and it's a smaller thing, so it's kind of hard, I mean, you got to buy it and sit with it forever, because nowadays the rental market isn't there. Maybe next year, maybe 2 years, it'll be back. We don't know. Right now, there's a lot of empty spaces. Every building I walk by in Makati's got a sign for lease.
Yeah, that's correct.
Wow, these are
Yeah, so it's
golden
like a
nuggets.
yeah, so it's actually a ghost town in the commercial market. So
I see. I see.
yeah, there even is I even have clients or owners to the point that they'd say, if you get a client, tell them that we have a promo of 1 month free.
Oh wow, really?
Yeah, and we've been marketing that for quite some time and no takers yet.
Really?
Well,
Maybe I should
I have a
squeeze my
friend.
landlords. I'm just kidding.
I have a friend who has an office in Tower One. You know, the Ayala Stock Exchange building.
Hmm.
His landlord, before the end of the lease, I think a few months before, called him up and says, "Don't worry, don't leave. We're giving you 30% off on your lease renewal."
Wow. I could really squeeze my landlords for my BGC office and for my upcoming convenience store. And I'm just kidding, guys. Let's see. Let's see how the market reacts. But these are really good golden nuggets of information that we could add to the GBO archives, guys. Well, of course, with your permission. Everyone's permission here. So yeah. Okay. Last question. Any last round of questions before we take a photo and say goodbye? I see a hand moving from David, or is it like just a blur on the background? It's a blur.
Must be a blur. I didn't move my hands.
It's a blur.
It's a blur. Okay. Yeah, I was like, is David raising his hand? It's like there's like a twinkling blur on your background. So. Okay.
Yeah, I don't know why I noticed that.
Okay, guys, let's take a photo for memory's
Okay.
sake, and I'm also gonna post it on LinkedIn and share it to the headquarters of GBO in Spain, and report what we've experienced here today, both the good and the bad, like the technical and the and everything. So just look at your camera and smile. Okay. Thank you so much, guys, for attending. I hope you learned something or engaged in this way. On the next event, we will have David's event and his daughter about um, internet and other trends and digital marketing. So it would be very interesting. Where's your daughter based right now, David?
Right now, she's in Switzerland.
Okay, so we're gonna have an event from Switzerland, Philippines, and people who will be joining from GBO as well and other places. So
Yeah.
hopefully, it'll be more stable and less technical difficulties. We're gonna use. Do you want to use Zoom or Google Meet? I can request David because.
Well, it's up to you. I mean, maybe you got to ask some questions from noisy support and ask how to use this thing.
Yeah, I definitely need to ask because this is not the first time they've had some tech issues. So.
It might be that I don't know if they have like co-host, because you're not the account owner, so maybe there's something missing yet because they're still developing the product that allows sub editors, I don't know, whatever, something,
Yeah.
so that
I will
you
edit
know
this in the video that I will send headquarters, but I've met the owner or one of the investors of Noisy, and he even published a book recently, and he was on TV. So yeah, I will definitely tell them like, hey, your product needs some little bit of help.
no, they know, but look, it takes time for a product. Even Zoom, when it came out, it had a lot of problems, right? It takes
True,
time to
true, true.
develop, right? You're in
Understandable.
software also, you know that.
Yeah. Well, Zoom had a good. I mean, they've been there for a while, but they only took off during pandemic, so that tells you something to be patient.
Yeah, yeah.
So yeah, that's the whole thing. So okay, thank you, Mr. Oliver, for your time and expertise and
Okay.
presentation. Thank you, David, and
Thank you for
Pal,
having
for
me.
attending. Yeah. See you again. See you again next time for the next event. Hopefully in David's event. So yeah, every week we have an event in GBO. So just stay tuned, or you can visit the website. So see you guys. Thank you. Bye bye.
Bye.
Okay. Bye.